Start on YouTube here. Got it. We'll wait. Start webinar, and then while you're pinning people up.
And go.
Okay. We'll let people jump on here for a few minutes before we get going, get ripping. Man, we kind of overloaded the screen with Canadian representation.
Just out here. We got the flag flying behind you.
As long as we hear some of you guys say "a" once in a while, we understand better in the U.S. Okay.
I'll walk both sides of the line, I guess, on that one. So anyway, we've got 300-400 people that are already dialed in, and we'll just get started with this. And Trevor, but you know what? We want to welcome you to the pregame show, and just glad that you're willing to put yourself on the hot seat here today. And what I think is really good is for people to see other people that are actually real, that maybe felt like quitting and didn't quit, and where you're at today. And so can you just let us know what part of the world that you live in?
I'm in Sherwood Park, Alberta currently. I've been here for about 15 years, 16 years in Alberta. Yeah.
Wow. And so how long have you been in Primerica?
I've been in Primerica since November 2009. I guess I'm supposed to say A, right?
2009. And, you know, I do know a little bit of the history and the backstory. And number one, is your RVP still in the business?
Both my RVPs have quit. That's correct.
And as far as I know, you were very close to quitting in the business, and then something changed. Do you want to just give us a little background to that?
Well, but 7 years ago, I mean, I had a few clients. I was making some money and had a little bit of residual passive income coming in, but it wasn't huge. But, you know, just life circumstances, things happen. Starting to have a family, getting married, doing all those things. And, you know, my current RVP, you know, for personal reasons, he kind of wasn't around or wasn't doing a lot of coaching, and not blaming that on him. That was, you know, this business is all about us taking initiative, us taking that leadership role and building our business. But at the time, you know, things just weren't going as good as I wanted to go. And, you know, my RVP wasn't really around, like I was saying. So I decided that I was going to quit the business. And this was about 7 years ago. And so I rolled away from that RVP and went to another RVP that was in our office because I knew that that particular RVP would probably take care and love my clients and do the right thing. And so, you know what, I had a conversation with him, and one of the things he said, he wouldn't let me quit. He said, Trev, you're crazy. Like, you got a little bit of money coming in per month. And he coached and mentored me. I had a phone call, and this is why I think it's so important, guys, to always stay tied in with your upline, with your coach. You know, someone that really cares about you. And I called Arlie Larson and said, Arlie, this is what I'm thinking about doing. What are my options? What do you think? You know, I don't have a mutual fund license. He said, Trevor, go get your mutual fund license. I'm like, well, Alberta, we can't get our mutual fund license here in Alberta. He said, go write it anyway. I was like, okay, coach, you know, I'm going to quit, and I don't have a mutual fund license. I said, okay, sounds good. You know, I blindly just went and wrote my mutual fund license. And at that time, I think I was only one of the very few percentage of people that actually was able to hold a mutual fund license part-time here. So, and that kind of gave me a new passion, a new I guess, motivation to stay in the business and to really start over. Like, again, I had some clients, I had some things happening, but it wasn't really wasn't going as quick as big as I wanted to. My own fault, of course. But they gave me, again, just a new jumpstart. Kind of got excited again about investing, about, you know, building a business. And yeah, and then, you know, shortly after that, my original RVP quit. And then shortly after that, my current RVP quit, who was branching me. I had to find a new location, a new office. And that's when I moved locations, and I found a new office on 50th Street in Edmonton, which is, you know, Bernard Lazaire's office, Phil Williams, which completely changed my life forever with the culture, the teaching, the mentorship. And you know what, from that day forward, after I got my mutual fund license, then I started paying a lot more attention to Arlie's phone calls. I was calling Arlie a lot more often. I was asking for some coaching, and he always answered his phone or got back to me within 5 minutes or text me back. And again, it was me who needed to take that initiative, take that business and start pushing, and that's really what happened. That's a little part of my story. But it's just interesting. We talk, we never ever quit. Well, if I would have quit, what a stupid mistake that would have been. And where I am today, given it 7 years ago, I just had to make one phone call to Arlie Larson, and here I am. So yeah.
Hey, Brad or Mark, and you had some questions.
Where are you at today? Like, tell us what's the end of the story here as it is now?
Well, I had a great month last month. It was my biggest month. It was over 44,000. When I decided to go RVP in 2019, I was making less than 30 grand a year. I got my watch by Christmas. I got my first diamond about 4.5 months later, and then I got my second diamond a year after that. I'm over $200,000 currently, and I'm pushing for 3 this year. So it's going to happen. I got lots of stuff in the pipeline that's coming, and I just know between now and Christmas I'll have my ownership. So yeah, I mean, it's crazy when I think of it. I would have quit, 7 years ago compared to quitting my job almost 3 years ago, full-time employment, making 120 grand a year. Here I am. So
Hey, Trevor, tell them that, I used to bug you a lot about the golden rule. The one that makes the money writes the rules, and your wife was making more money to you. So I sort of took you to dinner a couple of times, and it cost me a lot to take you to Ruth Chris a couple of times, but it seems to work. So maybe tell that little story.
It's so true. My wife has a full-time job. She's very busy. We're parents of 2 kids, so we got things happening, lots of sports. And one of the things is, when Arlie takes us to dinner, it gives my wife, to just expand her vision and says, "Wow, this is incredible. I get to talk to a $2.5 million a year earner in the business." And every time we walk away from those meetings with Arlie and Fern, my wife just softens her heart that much more in the business. And one of the things my wife told me, which is one of my biggest whys this year, she said, "Trevor, if you get ownership, I'm quitting my job." And so that's the biggest thing for me, and why I push so hard, guys, because I want both of us to be in this business. I want us both pushing. I want that partnership. And I want to change our course of history forever, guys. That's my passion in 2022, is to have ownership, and I will have it, and I will make her quit her job. So that's the goal. Well, I can't make my wife do anything. She's a complete driver, and Arlie knows that. And I'm amiable, so hey, I can't make her do anything. So I can let her make that decision. But I'm going to make sure she follows through with her promise. So.
Hey guys, you know what? These kind of interviews are incredible, and you know what? Brad, I'm going to turn it over to you, and you turn it over to Ben on just any last final comments before, and then kick it to Ben and start the show.
No, look, I'm so grateful for Ben, who decided I'm gonna open up the training that I normally do to the rest of the company, because I think it's the most valuable thing that my guys get to plug in to hear from the best of the best, all in Primerica. And I think it's just helping everybody. That's all we're really doing here. And so, Ben, I'm grateful that you opened your heart to the rest of us. So I'm going to turn it over to you, buddy.
Appreciate it, buddy. And you guys are obviously very, very helpful with all of this stuff. So it's definitely not me. It's a team effort. And I could spend a lot more time just listening to Trevor. Hey, the reality is, I just want to comment on a few things. Most of you, unfortunately, will quit right before your business explodes and right before your business gets really, really easy. And that's the sad thing for me. Oftentimes when things get toughest, that's when the breakthrough happens right after that. And I was just talking with Brett this morning, and he's going to do a great job today, but we're just talking about how easy this thing really gets and how much passive income that you can make in the investment business, how much passive income you can make on overrides. But unfortunately, a lot of people quit during the grind. And I just want to echo what Trevor said is really you have to grind for a couple years. but then I haven't had to grind it all after that. And I just think, man, it gets so, the return on investment gets better. You get way more out of your time than when you first started. The hardest part is in the beginning. Guys, by the way, that's not a Primerica thing. That's a business thing. It doesn't matter what kind of client base you have to build. It takes a couple years, but then it gets so ridiculously easy and you can make so much money doing nothing, that some of you that are brand new just need to realize that. Just hang in. I mean, it doesn't mean that you don't have to get to work. You have to get to work, but give it a shot. Give it a real shot. It does take a couple years. So Trevor, man, I really appreciate your story. The second thing I want to comment before I get into the markets is you need to have goals that capture your heart. I promise you, when Trevor doesn't feel like calling somebody or texting somebody, but he thinks about winning for his wife and maybe getting his wife out of a job that maybe she doesn't like that's going to make him make phone calls when he doesn't feel like doing it, right? I can't tell you how many times when I was grinding for those first 3 years and I didn't feel like doing it, I'd look at a picture of my wife and I'd look at a picture of my oldest daughter at the time, and I made more phone calls. But ownership, if you can't tell, he's obsessed with it. Unfortunately, a lot of people don't have goals that they're obsessed with that capture their heart. Because not only is it a goal, but he has emotional attachment. Winning for his wife and his children is powerful. When we sometimes make this business about something that's, of course, way more important than business, it gets our business gears to work. So I think it's really, really, really cool. And what's cool is Trevor's going to find out that his income is going to continue to skyrocket. His AUM is going to continue to skyrocket. But he paid that price in the beginning, and he kept with it when a lot of people will quit. It also highlights leadership, right? What if Arlie wouldn't have stepped in and maybe pat him on the back a little bit? So let's make sure that we're doing that with our teammates. Hey, real quick, a few things on the market. I want to kind of go over some of the questions I've been getting, not just from clients, but reps. We did see the yield curve invert a few weeks ago. I will tell you, generally, it's got almost a perfect track record of predicting a recession. It's just a matter of when the recession happens. So, of course, again, stocks look forward. So people always have this disconnect with what's happened in the economy and what's happened in the market. They're two different things. So again, we've been talking about, for the last, I don't know how long we've been doing this MPI, that we could see a significant correction. Again, that is good for your business. People are going to reach out to you. You don't have to reach out to others when you're engaged because they're panicky about the market. That's a good thing for us. And I am more proactive with making adjustments to portfolios. I'm not a short-term trader, but I am more proactive with adjustments. I try to treat people the way I would want to be treated. And what I'll tell you guys is because of that, I just get a lot more easy business, right? So there's hard Primerica, there's easy Primerica. And what I find is more value-added things to your client base. Communication with your clients just leads to a lot more easy business. Again, stock valuations, we've got rising interest rates, we've got reckless money printing, we've got inflation issues, all the reasons to be bearish. If you say, hey, why are you still, what would be a reason to be bullish? Why I would say sentiment, You say, well, why could this market last a little bit longer? Well, there's still a tremendous amount of skepticism. So a bull market typically doesn't end that way. What is the best asset allocation right now? That is a discussion you should have with your clients, right? How much they should have in stocks, bonds, real estate, cash, crypto, et cetera, et cetera. What is the proper asset allocation? Volatility to me is only going to get worse from here. By the way, that's very, very normal. Regardless of how long this ninth inning lasts, volatility goes up at the end of bull markets. Okay, it's very, very, very natural. It's a good thing again for us and our business. I do expect everything that's counter to the inflation trade to continue to outperform. I talked about it last week. but I do believe we're in the middle of a commodity super cycle. Historically, they do last for a couple years. Historically, they do average 250%. Does that mean you should put all your clients in commodities? No, but I would be shocked if they didn't outperform, not just this year, but I would say this year and next year. If you ask me what's going to do the best in terms of options with us, I would say commodities. Some people are also getting nervous. They set up a municipal bond portfolio for their client maybe in the last 6 months, and they're like, when's the pain going to end? You know, municipal bonds historically should be more stable, right? The default risk of an individual municipal bond is less than 1%, but you put them together in a fund, it should be pretty stable. You get some really nice tax-free income. There's been less issuance. There's still a demand because people want to try to avoid taxes. But munis are down year to date. I do expect that to stabilize. I do think a lot of it's priced in. So again, we've seen the 10-year Treasury go up almost 70% in the last 30 days. That is a quick move in a short period of time. I do think a lot of it's priced in. So, you know, clients do not want to just sell positions and ignore their long-term strategy just because something's down in the short run, right? That's our job, right? I always joke around with my wife that I probably have a PhD in psychology when you think about all of our conversations that we have to have with clients. But your job, now, another thing to just note there with the bonds is those of you that only put clients' money in one fund, you're going to get killed, right? Think about when we had the Puerto Rico and issue in Detroit, and then the entire municipal bond market sold off. That's why you don't set up a portfolio with just one municipal bond fund, right? Because if that fund has a bad year, your entire portfolio has a bad year. So asset allocation, real important. Let's go to the next slide here. One question, this is something clients ask me all the time. So let's just say they're down year to date, right? So the S&P 500 is down 11% year to date. NASDAQ's down 20. Bonds are down. So they're going to say, yeah, Trevor, I want to move forward with the transfer, but I don't want to do it until my account value comes back, right? We hear that all the time. This is how you address it, so it's not like your client selling low and then buying high with you, right? If you're doing a similar portfolio, my argument would be that we're selling low, we're buying low, but what we're buying is a much better portfolio. This is why. And the second thing, of course, is you're getting much better service. So clients, in my opinion, should always move the money to you immediately. I think you're going to, you know, if you get good at this business, I look at it this way, Trevor's going to care more about his clients than the other advisor, right? No question. The portfolio is going to be better. And again, if you're doing similar like 80-20 to 80-20, they've got more upside potential coming back with you than leaving it at that other company. So it's really important that clients understand that they're not selling low and buying high. They're selling low, they're buying low, but what they're buying gives them more upside potential to get back to that dollar amount that they're thinking about in their head, right? What should you do with my 401k right now? So again, we don't manage that 401k in most situations. So what I'll tell my client, I've trained my clients to do this. And you might say, well, hey, Ben, that sounds like a lot of work. Again, it gives me a lot of easy referrals. I don't mind it. But a lot of times I'll give them advice to tweak their existing money. So existing money, they might need to go safer since we're in the 9th inning. Future money, we keep aggressive. So you can have a different allocation for existing money, future money, they dollar cost average, aggressive as possible. But depending on the client, they might need to go more risk off. Getting client questions every single week about physical gold and silver. Yes, I'm a big advocate of it. I buy it personally. I think if you look your client in the eyes and tell them that's a bad idea, like I'll be honest, I think you're in the wrong business. If you're the type of advisor that only gives people advice if it benefits you, I don't like that. Obviously, we want to be compliant, but I'm going to give people advice I would want if I were in their shoes, right? So 40% of the dollars in circulation that have been printed in the last 12 months, I do expect physical gold and silver to do really, really well. And I do look at it as real money because you can't print more of it, right? I would, if it's me, I'd rather buy silver at this point because it's used in more construction. It's got more of a tangible value. I do think it's more undervalued than gold. Historically, silver trades for 1/16 the price of gold. So if gold's at 1,900 an ounce and silver's less than 25 an ounce, I see more upside potential. Should I buy crypto? Again, are we supposed to be giving people advice about crypto? No, we have to be compliant, but I'm just saying from a personal perspective, for your personal portfolio, I do think you should think about diversifying outside of the dollar and go into what I think of as outside of the normal money supply. Decentralization is a key thing to keep in mind. Shouldn't I just keep my account where it is to keep the fees down? Again, it's about net rate of return. So one of the things to always break down for your clients is what's the net rate of return. And what I'll do is, hey, other clients of mine have felt the same way when I met them is, hey, why don't I just keep my 401k where it is? Isn't an IRA more expensive? And what my clients have found is working with me gives them a chance to make more money in a good market and lose a lot less in a bad market. So therefore, although the annual fees or upfront fees might be a little bit higher, over time, that relationship helps them produce a much higher net rate of return, right? Why do people work with a hedge fund manager, even and their fees are significantly higher than ours? Is they want a better rate of return. They want a better relationship. So if somebody's going to work harder and help me make more money, I'm okay with them making more money. Like, don't you want your advisor to get paid more if you do well, right? That's an important thing to bring up to people. Hey, if your account value doubles in size, my residual income off of your account doubles in size. So it's about net rate of return when it comes to fees. Client strategies, again, if you're in the US, I know not all, I don't understand Canada rules like you guys do, but which annuities, again, I do like the daily step up quite a bit on the variable side if the client can wait till 65 or older, because I know what we don't know when the market top's going to be. I love the idea that it locks in the highest point, and I also like the higher payout over 65. If you have a client that doesn't want any risk, I do think you should maybe consider the fixed index annuity, because they might be the client that they only want to make money. They never want to lose money. So it could make sense depending on the risk tolerance, the client situation. You know, this structured type annuities, I personally don't use because I want flexibility. I want to be able to move, you know, earlier than every 3 years, 5 years, 6 years, whatever product you're talking about. It doesn't mean I have a problem with any of my advisors recommending that to people. It's just not for me. Strategies in the managed space, I am going a lot more tactical because I want them to be able to make changes and de-risk when it makes sense. Again, rebalancing mutual funds depends on the client. But again, I have been making some tweaks to more of the metals and commodities year to date. College planning. One thing I want to mention real quick before we bring Brett on is there's a lot of, in the US, there's a lot of companies that all they do is help parents with getting grants, scholarships, filling out the FAFSA and the CSS paperwork. And all that stuff's good. Like, you know, to sit down and help them get more grants, scholarships, more funding, that's awesome. But when they try to steer people towards a cash value policy or throw it in a fixed index annuity because they don't have a securities license to hide it on the FAFSA form, I have an issue with that. I'm not saying it never makes sense, but when their end goal is to just sell them a product, what I don't want my client to do is maybe put their kids in a better situation, but they end up screwing their personal retirement. I've been running into that every single week. So you guys might run into that quite a bit as well. I think it's important that clients know that these companies can help with the college planning, but just have your clients not buy any products from them, right? The last thing I want to hit on, because again, we talked about this earlier this week, but I think it's important. I think everybody in Primerica should feel great regardless of what type of business that they run. I don't personally do a lot of recruiting. I don't personally do a lot of premium in my base. We have just promoted another RVP here on Tuesday. We'll promote another one next month, and we're pretty heavy investment focused. That's fine, right? But I hope I recruit a bunch of people that do a bunch of premium, but we want to have the mindset that it's production. It's not securities. It's not life insurance. It's production. And I do think every 50,000 in securities should be the equivalent of 1,000 in premium, right? And everybody, it should be celebrated. So if someone does $1 million in their base, we want to think of that as writing 20,000 in premium. I do think that it will get to the point where, especially those that are plugging in this call, that they're doing $1 million a month in securities. And they can promote a bunch of RVPs that do the same thing. And the nice thing about the securities business is it gets easier, more referrals, more passive income, and it's not predicated on the fact that people have to run a bunch of recruits in premium every single month to make real money. Okay, lots of passive income. And as I think as we get better at recruiting and do more recruiting, I do think the ratio of those that get licensed will go up. And I do think they'll get to RVP faster because they're doing the full job for the client, which is most important, guys. This is a long-term relationship with a client. It's not a transaction. So I think people will get to full time quicker, make more money faster, be around long-term. But guys, we're really lucky to have Brett on today. Let me give you guys some of his numbers real quick. He's at $80 million in personal assets under management, but there's 48 of that in managed accounts. So he's got a high passive income. Absolutely love it. He's got more in managed accounts than I do. So definitely want to catch up to him. But Brett, hey, tell for people that don't know you, man, tell a little bit about your story as we get started.
Yeah, well, thanks for having me, Ben. It's an honor to be on here. All the speakers, all the panelists. That's how I built my business, how I built my securities business. I take a lot of what we cover on these calls and we implement it, we use it. So thanks for having me. My dad's been in the Primerica business for almost 40 years now. So I'm a Primerica kid. I got started in my mid-20s in the business, and I got started in more of the traditional sense, right? Building a base shop, below RVP, we averaged for many months, we do, 20 by 15, 25 by 20, those types of numbers. And, I got to a point where I got a little bit frustrated with that whole process, right? More frustrated with myself. And so through that journey, I fell in love with the securities business. I had the opportunity, my wife, her brother runs a soccer club. Soccer's my passion. I play college soccer. So still maintained the business, was still doing the business, but had a chance to do some things that, I really felt like I was making a difference in the lives of others. But as my family grew, right. And I got married and I was like, wait a second, life changes real quick, real fast. And I had the opportunity to do some things along the way that really, grew my appreciation for what we have here at Primerica. I was having a conversation this morning, coffee with a lady, and she was basically recruiting herself to me. It was a sales presentation, but she's like, I need more time and I want more money. And she's like, can you help me with this F&A? I'm like, yeah, but I can also. So I think the place that we're in right now and the timing is impeccable for where we're at, the wealth transition that's recurring. And yeah, so thanks for having me.
Yeah, unbelievable. Hey, so 48 million in managed accounts. What does that pay you per month?
Right now, it pays me somewhere between 22 to 24 grand a month.
So that's not a bad starting point as you build. Talk about some of the lifetime strategies that you like the most, depending on the client situation and why.
Yeah, so I did a lot of trial and error. A lot of times people call me and they ask me, Brett, how should I get more familiar with the managed account strategies? I say, read about them, learn about them, call the companies up, right? And don't just take everything for granted, right? Kurt Poole's been a huge asset for me. Lester Jones been a big asset. And, so what we have, if I was to kind of score our clients, if we look at kind of from an asset allocation perspective, the growth managers, we use AGF Global and we use Lockwood US Aggressive Equity. Okay. The core managers, I'm looking at Dana, and I also like Invesco. Invesco's US All Cap. And, I heard through the grapevine, they're making some changes to that. It's going to make that even better for us and on our platform. And then for the value managers, I look at ClearBridge Dividend, RNC Genter. So I basically have my Fab 6, right? I got my 6. And in a perfect world, if a client has enough money, sometimes I'll use all 6 of those. Fixed income, I use Sage. Their multi-asset income, I think, is the best fixed income opportunity that we have right now on the platform. And it's tactical, right? So I had a call with the Sage people yesterday, and they're going in, they're making some changes to the portfolio on a proactive basis, which is what our clients, right? That's what they expect to be happening. It's what they want us to do. My Swiss Army knife, Ben, you and I have talked about this before. I use Horizon. And I think, people ask me all the time about Horizon. And I would tell everyone on this call who has a 65 license, you got to understand what the purpose is behind the managers that you're using. A company like Horizon is not a magic ball, right? And sometimes people describe that to their clients. Oh, they're going to time the market perfectly. They're going to get back. No, they're not, right? That's not what it's designed to do. It's designed to protect people from a catastrophic loss in their portfolio. In a V-shaped recovery, it's going to lag on the upside. But the clients I'm using for Horizon, they're not concerned about hitting a grand slam, right? If they can hit a consistent base hit, right? In a year like last year, I think the Horizon portfolios, depending on what model you're in, were somewhere between 12 and 18%. Hey, my clients are happy with that. If the market goes down 40% and they're down 12 to 20, that's what they want, right? And so I think, my biggest piece of advice for everyone on the call today would be to learn the managers, learn what they do, learn how they fit into a portfolio. Don't just chase the returns. How do they really fit in together? And what's your purpose behind, why you're using this? What are you explaining to your clients as to why we're using these strategies? So those are my grouping of managers that I use.
I love that. I also use Sage and Horizon a lot, just because, again, it's about risk off for a lot of clients. And that analogy is perfect. They want to hit singles every year. They might not want to go for that home run. So talk about, you transition from recruiting, doing a larger base to more of an advisory type business. Talk about some of the best methods that you use for lead generation and marketing, and talk about what you're doing now, because I know you're on the forefront of branding yourself, right tools to generate more leads. Can you speak to that?
Yeah, sure. So anyone who knows me personally, like we do stuff on social media. I'll be the first to say, like, I am not an expert. My wife helps with all that. That is her go-to. She is she's the brain behind the scenes. Ben, when people first started talking about like reels, I was looking for a fishing pole, and I was like, what in the heck is a reel? I don't understand any of this. And so I befriended Dave Harms, and through that relationship, I got to know Dean. Got to know you, right? And the forefront, here's my piece of advice to everyone is the second we start saying that, we're just going to do things like it's always been done, is the second we become obsolete, right? And the power of technology, the power of leveraging tools like social media, right? And just leveraging, hey, how can I get my name out there to as many people as possible, right? With the least amount of effort, right? As I think what it's all about. I think that's what makes our business attractive to young people today. It's not thinking that they got to come here and, pick up the phone and call a gazillion people and knock on. I mean, granted, we all have to do some of that, by the way. But if it's fun, right? And people see it as not necessarily being easy, but being simple, and how we could leverage technology. So some of the things that I did, back in 2017, 2018, I call it like my madman cycle, right? I did a lot of things. It wasn't all right things, by the way, Ben. It was just, I was like, man, if I'm waking up and I don't already know what I need to be doing, I'm going to get myself out of business. So I went and visited schools. I prospected for financial wellness workshops. I think I handed out close to 220 packets. I did one wellness workshop. So maybe my method behind it was pretty poor, but hey, you know what? I think that, and I played high level sports growing up, and confidence is everything. And I'll say that again, confidence is everything. So in our business, activity a lot of times will give you confidence. If you just get out there and you show yourself that, hey, you know what? I'm not going to give up on me. Ben, you said something powerful earlier. Most people, we've all heard the book, 3 Feet from Gold, right? We're literally almost there. It's just that we give up too soon. And so I'll never forget, I prospected for a wellness workshop for a company. They're like, Brett, this is going to be awesome. It's going to be incredible. We'll probably have 40 people there. I was like jacked up. I got like, because we don't ever want to not have enough food, right, Brent? So I got like 50 Chick-fil-A chicken biscuits. I walk in, and no joke, it was me and one other person and 50 Chick-fil-A biscuits, right? So my wife and I ate Chick-fil-A biscuits for like a solid 2 or 3. We gave a bunch of them away, but just that alone. And then what I remember that day, I'll never forget that, because I called my wife afterwards, and I literally went from there. I went back to the office. I picked up the phone, and I just kept setting up more appointments. So the things I would recommend, and we call it, I heard, a Primerica leader call it 5 to stay alive, whatever you want to call it. You got to have renewable sources of contacts. So I tell everyone, our team, it's like, hey, would you rather be a hunter or be a trapper, right? I'd rather be a trapper. So how many traps do you have out there? And networking, I think, is something that we can all do, right? It's a lot of these are free, or you pay for a lunch. You got to eat a lunch anyway. So go meet some professionals in your area. Network with the right kind of people. Be intentional about what you're looking for. I think a lot of times when people do coffee appointments, they just kind of want to meet and greet, and then they leave and they're like, okay, I did something good, but there's no next steps. A lot of times if I sit down with someone who is looking to maybe recommend someone like myself, I'm going to show them the value that we can bring, the problems that their clients are probably having, and how we can assist in solving them. So I think, whether it's social media, financial wellness, prospecting businesses, getting really good at getting referrals. Invesco has a great thing called Preferrals. I would encourage everyone to take a look at that. It's basically positioning yourself as someone who's a consultant, not a salesperson. Hey, Mark, a service I provide to my clients. Here's a couple of things that I see right now in the industry that are really unnerving me. People are getting taken advantage of with their fees. They don't have strategies, right? They just have products. And my commitment to you, Ben, is anyone that you ever sit down with, someone that you care about, I'm here to be a sounding board, right? It doesn't obligate them. It doesn't obligate me. I'll never discuss your personal business, but I want you to know it's a service we provide to you, right? And if anyone ever fits that mold, I'm here for them. And we position ourselves as someone who, hey, I'm taking on new clients. I want to help people, but I'm not like, foaming at the mouth, asking for 10 referrals, or I'm not going to do this F&A for you. Just my personal opinion there. So those are some ideas, Ben, that I think could help everyone. And then utilizing the technology that y'all have created, that Dean's created. It's been monumental.
There's so much to unpack there. One comment is you have to behave your way into a good attitude. The reason people don't have a good attitude is they're not doing anything. They're thinking about Primerica instead of doing it. Most people don't have enough appointments, right? You have one appointment set up all week and it's bad, then of course Primerica sucks, right? But if you've got 8 appointments set up on Monday and 2 are bad, it's still going to be a good day. So I think that's important. Rotating your leads, as you mentioned, I think you have to at least have 5 to 10 different ways that you generate leads and rotate them. Number 1, so it doesn't feel like Groundhog Day. But number 2, so your business is more consistent. If all he would have done was wellness workshops, his business would have been slow, right? But he was rotating a bunch of different things. I think that's really, really important. Talk about Brett, because obviously you're at $500,000 in income. You're at almost 50 million in managed accounts. So obviously your clients like you. Sounds like they're staying with you. They're giving you more business. They're giving you more referrals. Describe your system to stay in touch with people, add more value. do you have a process for that?
Absolutely. This is something that we have tweaked along the way. We continue to tweak. Every 90 days, we reach out to our clients. I have personally been doing most of that up until recently. We have an administrator now who's taking on a lot of that responsibility. But what I've done, Ben, is I've kind of segmented out my A clients, and I am the point of contact always for them. They know we have a team approach, but those are the people that I get most of our great referrals from. And so I want to be the person that picks up the phone and call them. And let's be honest, I'm not that busy that I can't dedicate, an hour once a week, every quarter, to reach out and call people and say, hey, how you doing? Reviewed your stuff. People that I think we need to sit down with, Ben, I let them know, hey, I'd like for us to sit down, maybe look at making an adjustment. Here's why. We do that. A lot of times it's, hey, I've reviewed everything. Things look great. We'll be in touch soon. What I have done recently is, with all the volatility in the markets, I let people know that, hey, you might have people in your life that are experiencing this volatility. They might not have the same type of relationship, Ben, that you and I do. And so once again, a service I provide, I'm more than happy to be a sounding board for those people. If you think it would be a good fit, I'm going to leave that discretion up to you, Ben. Great. Talk to you soon. Bye. So every 90 days, with our 8 clients, we do 1 to 2 in-person reviews a year. That's our process. I've read a lot, I read a lot about what the industry does, and I call them surge meetings, which is, hey, we have to be very specific with our time. I only do reviews during, X months, right? So that's really April through June and October through December. That's my surge times. And a lot of times people will email me and I'll ask them, I'll say, hey, Ben, is this an emergency? Do we need to meet right now? If we do, that's totally fine. Or is this something we can hold off until we meet in May? And you'd be surprised how many people will tell you, oh, but that's okay. We'll discuss this in May. Because we only, our most precious, right, commodities are time, and we have to control it. So from a process aspect in reaching out to clients, that's what we do. I know, Ben, when we talked earlier, I mentioned, we've revamped our process. A lot of what we do in terms of how we bring people in the system, we have a discovery meeting. That's just to figure out kind of if this is going to be a good fit on both sides. And then we're very intentional about our process of how do we help people understand. I used to use the word educate. I realized that, I was listening to a podcast. The word educate sometimes has a negative connotation to people. How do we help people understand the markets and understand money? And I take a lot of that from Chris Royce, right? 3 fundamental accounts. What do we help people protect against? The taxes, inflation, market swings. How do we protect against those? Discipline, dollar cost averaging, diversification. I talk about the criteria of we don't just make a recommendation to make a recommendation. Ben, if I sit down, right, and visit with you, I'm going to take a look at your fees, your strategy, your vehicle, your risk, your performance, and your service. My commitment to you is, if we can't make a difference in one or more of those areas, I wouldn't even think twice about asking you to take a second look at it. That type of a process flow has helped us a lot. And the last thing I'll add to that, Ben, is I learned from Lester Jones, you got to get really good at telling stories, right? And if you can pack little, I call them lines, right, inside your presentation. Offense and defense is one I use a lot. It's not what you make, it's what you keep. Sometimes what you don't lose is just as important as what you make. Things like that. Those type of lines, because I've realized that most of our clients, the ones that have a lot of money, they don't necessarily understand money better. They just saved better, right? They prioritize saving and investing. We started putting together a strategy session for our clients, an agenda when we meet. That has been a real game changer for us to really break things down, simple steps that help people understand it. And so I'll stop real quick here to see if you have.
Yeah, lot to unpack. When you guys do reviews, you have to have a really good meeting plan. If you guys just show up and print off the statement and don't prepare at all, your clients will not look forward to those meetings. They won't want to do a review again because you're not providing any value. You're not going to get additional business and good referrals. So have a plan. I'll also say with his A clients, if you study, all of you guys, if you haven't done this, everybody on this call should take some time really soon to study which clients are giving you the most referrals. because I find personally 80% of my referrals come from 20% of my clients. So that top 20%, I'm going out of my way to provide them with more value. It's not that I don't have systems in place for the rest, but we make the mistake of trying to ask our clients that are never going to give us any referrals. And it's like asking for a pint of blood, right? We're not going to get it. We have to go out of our way, I think, to bring more value to our the clients that have been proven over and over again to give us more referrals. We want them more happy, right? Brett, volatility obviously is huge right now. Can you maybe share some of the slides that you use to kind of cover volatility? Because we obviously know that investment behavior is way more important than the actual investment. So can you talk a little bit about that?
Absolutely. This is a great slide deck that Invesco has. Speak with your Invesco person. They'll give you this. One of the things, Ben, that we have changed, we stopped selling people and we just started talking to people, helping them understand that the behavioral component, in my opinion, the behavioral component of investing is equally as important as your asset allocation, right? I mean, you got to stay invested through good times, bad times. Ben, I know you make a lot of proactive changes to your accounts. You know, we have a lot of conversations with our clients doing the same, but people that understand this and they, it's not just something that was talked to them once. A lot of times we revisit slides like this. And so I'm just going to highlight a couple things here real quick. You know, when people see the returns that things have had, the average investor has returned 4.1% when the market has averaged 10.6%. Why is that? That's investor behavior, right? Look at this. The herd is often wrong. And sometimes the emotional point in investing, when we feel like, hey, the best thing to do is I should just take this out and sit on the sidelines, right? That's actually the worst thing to do. And here's why. Look at this on the left side of the screen. If you missed, right, if you know, 25 years, right, 1997, 2021, if you stayed invested through the full market cycle, $100,000, your account would have, you know, returned right at 12.3%. It's a little over $1 million. If you missed, right, the 10 best days, look at that. Your dollar figure is cut by more than half. And once again, on the chart to the right, sometimes the best days come in the midst of the worst days. I mean, nothing could say that better than COVID. We saw 9% market swings, right, during that period. So a lot of times people think that market's gambling, you know, investing's gambling. So I love this slide because it shows your percentages. I want to make sure, because I don't know who's going to get these slides. I'm not promoting gambling, right? But I am promoting staying invested over good and bad times throughout the market. Look at this. You're in a 1-year period. It's referencing the Dow, right? Your chance of success is almost 75%. I'm a huge sports nut. My office is real close to the Atlanta Braves, right? Imagine if a baseball player could step up to the plate and hit the ball 3 out of 4 times, they would be a gajillionaire, right? Does that make sense? Look at that. The longer you stay invested, the more certainty of returns you have, right? Every generation faces challenges. There's always bad news. Look at that. Look at the volatility spikes, and then look at how quickly sometimes the market recovers during those. I love this slide here, because this shows you the average pullback in a market. Like Ben, a lot of times people now are saying this volatility we're experiencing, oh my God, it's really not that bad if you look at on this chart, right? Go back to 1984. The average intra-year market decline, almost 10%, right? And what's incredible, like JP Morgan has a chart like this too. 32 out of 42 years, the market finished with a positive return, but every year the market's been down at some point throughout the year. Look at this, right? Which asset classes have best performed over time? $100,000 in 1978 in small cap companies grew to a little over 15 million. Large cap companies were $15 million, right? Shows the rolling returns over there. You know, listen, fear. A lot of times I tell people that the market in short term works like a voting machine. It's very sentiment based. Long term market moves based on, you know, fundamentals, right? Companies that grow their revenue can grow their earnings. Companies that grow their earnings, right, over time will grow their stock price. Not every bear market means it's not that giant grizzly bear down at the bottom, right? A lot of times it's a teddy bear, right? I think that's a pretty interesting slide. And hey, this just shows a little bit at the end. So Ben, things like that, slides like that, I spend a lot of time with that with our clients, to be honest with you. Because if our clients buy into what we're doing and that staying invested and investing more is always a good thing, then it makes my job a lot easier.
So I will make sure we get that on Telegram because I know everyone's going to ask. I need Brett's slides. We'll make sure of that. Hey, so next question. So, I mean, you're a student, you're a professional, man. You study the business. So I see your passive income and your business continue to explode. Like, I guess 2 questions. Where do you see your business headed? And the second question would be if you could go back, like obviously you're the history of watching your dad grow up in the business, like what would you do differently? What would you change if you could go back?
Yeah, 2 great questions. So first and foremost, the future of our business is assets under management and people under management, and then meshing those 2 together. That's the future for us. My next stop is 100 million assets and managed. That's my next stop. That's our goal that we're pushing towards. Right now, we have 3 or 4 people in our base shop that, I bring them into the office once a week. We do nothing but really managed account investment focused training. And just this past month, we had one of our young guys, 25 years old. In the past 30 days, he's done about $3 million in new managed business. Right. We're getting people to buy into the process of, hey, if you stay focused and you stay disciplined and you keep adding assets to what you're doing, you will literally build up your own ATM. Right. And that's what people want. People want certainty of income. And I believe that we all become better recruiters, right, if we're recruiting to what we're most passionate about. For me, that's the AUM side of our business. That's what I recruit to. I recruit people. I show them a 5, a 10-year, a 15, a 20-year game plan. It would just go in the calculator online on POL and just show $2 or $3 million in assets under management. And do that over a 20-year period. Do the comp on that. It's incredible. When people work their whole lives to make what, $3,600 a month in Social Security, and in a 5-year time frame, someone could come here and build the foundation to never make less than $100,000 a year for the rest of their life. That's what we're doing. And so 100 for I only, because since we're talking a lot about managed, 100 million personally and managed, and then we want to get our business to where we have a collective 250 million in assets under management in our managed business. That's going to be the next stop for us. And then what would I do differently? Oh, sorry.
Real quick, how long? So how long would that take you? And what would that pay you? Because obviously you spent some time being intentional about that.
Yeah. So on the personal assets under management side, getting that to 100 million, that would position me to never make less than 50 grand a month in my managed account business. Right. And that's conservatively. Right. And I know that every probably, let's call it 7 to 9 years, that money's going to double. So that's 100 grand. Then it turns into 200 grand. Right. Then it's 400 grand a month. Right. Think about the power of that. You compound that out in a 30-year cycle. And it's not like I'm going to take my foot off the gas and not keep adding assets as well. And then what that would do, that would add basically whatever that is on the personal side, I would double that with our base shop AUM. And I believe, Ben, that we'll see people reach new records that we've never seen before in the next 10, 15, 20 years, with the investment business being a huge component of that. So that's the income to it. And then what would I do differently? Exactly what we've talked about today. I tell people all the time, hey, I would have been more intentional about doing the complete job for the client. You said something earlier, Ben, about, that's how we've always looked at it. Dave Harms has been a huge, my dad taught me this, and I built a great relationship with Dave Harms. Dave Harms always has championed the idea of builders that do securities, right? I love that slogan. I think if we're doing the right thing for our client, it should involve investments, it should involve life insurance. It should involve everything that we do if it's a good fit for our clients. That's the one thing I would be more intentional about from day one.
So I think one mistake people make is they spend a lot of time in the wrong market. What have you done to, for me, I love the 60 and older crowd. That's where I want to live. I feel like if a client needs life insurance, I'm in the wrong market. Like, what what do you do to try to make sure that you're in the right market?
It's funny. We had a class about this past Saturday with our team. I said, guys, you just need to look at who are you having the most conversations with? People ask me all the time, Brett, how do I grow my rollover business? I said, what's the average age of the person you're talking to? 25. They're not going to have a lot of money to roll over, right? And that's okay. Everyone needs help. That's how we built our business. Everyone needs help. But we really break our business down, Ben, to 25 to 50 and 50 plus, because the needs are different. If I'm 50 plus, I'm concerned about reaching my number and not run out of money. If I'm 25 to 50, I'm concerned about making sure I get there, right? And we make sure that we have a specific process for both groups. But for me personally, I am very specific, very intentional about, hey, where am I spending my time? Who am I having my conversations with? What are their ages? Because, I don't want to judge a book by its cover, but I know if I'm meeting with people in this demographic, age-wise, kind of what I'm looking at versus the other side. And I think to build a great business, there has to be a balance of both.
It's great. It's fantastic. And you mentioned, sports, the NFL draft, a lot of the first round picks tonight will end up being bust. And it's amazing that the average, their career maybe at last 3 years on average, if that. And you just talked about the amount of passive income that you're going to have literally doing nothing, because your staff's going to be doing the majority of that. I don't know if people can't get excited about that. I don't know.
Ben, last night, I'll finish with this and I'll turn it back over to you. We were doing a training class and I was looking at everyone's faces, on Zoom, because, I guess you could have your camera off, right? And I stopped for a second. I was like, guys, wait a second. Are we not excited? Right. And I'm like, wait, hold on. We are all here tonight. This is a volunteer army, by the way. I said, but we are talking about how you can change the trajectory of your last name forever. The potential of what that can be compounded out and making our countries, because we got two countries here, a better place, more financially independent people who run their own business, who have a high degree of certainty in their income. They know, like you said, Ben, every month when you wake up, X amount of dollars, the stress that alleviates from people, guys, that's gonna make our society a better place. And that's what we're jacked up about.
Yeah, and as your income goes up, you just know you're making a bigger difference in people's lives. That's what it's all about. The income is just a byproduct of giving people more value and serving more people. That's the exciting thing, I think. Hey, Brad, you handling questions today, buddy?
I think Mark and Kurt have been really mining them.
Scott.
Scott and
Evidently I am now highlighted. Yes, I'm handling him. Exactly. Hey, man. Hey, Brett, great job. You got Dave Harms as one of the panelists on here. He's got to be a proud papa watching you, buddy. Great job. Very, very good. Hey, we got a lot of questions about repeating things. So can you repeat the Fab Six?
Yeah. So the managers we use?
Yeah.
Yep. So AGF Global, Lockwood, US Aggressive Equity, Dana. I like their all cap and their ESG. Need to understand the differences. Yep. Invesco's US all cap, Clearbridge Dividend, RNC Genter.
Awesome. Great. Thank you. And also we had another question about, can you repeat, you went through 6 things, like when you're sitting with a client, you say, I'm going to look at 6 things. And if I can't do at least one of them, can you tell them again what the 6 things were?
Sure. So strategy, vehicle, cost, risk, performance, and service.
Okay. Great. Hopefully everybody got that. Hey, Ben, we got a lot of questions on I-bonds. You want to tackle that for a sec?
About what?
About I-bonds. People were talking about I-bonds and the interest rates that they're paying. And do you know anything about them? Do you use them?
So inflate. So great point. In addition to metals, commodities, another really popular area to be in right now is inflation protected bonds, because we have a 41-year high in inflation. So they basically take the inflation rate at a point, and that's what they're yielding. So to get paid 8.5% and a really low volatility bond is very, very attractive right now. So, and we do have another term is TIPS, TIPS, right? Treasury inflation protected securities or bonds. A lot of our retail providers have those options. They do exist in the managed space as well. They exist in some of our variable annuities. So if you have a client that's a little risk off, more conservative, I think it's a great place to hang out right now because the yield is just fantastic. So
Yeah, no doubt. Also, while I got you, can you make a recommendation on maybe one or two of the commodity funds you're using on a sector basis, maybe Invesco or Franklin?
yeah, I mean, I personally do a lot of business with Invesco. So, I mean, you have potential options again would be BRCAX. Now, if you do a trade for a new client, I think they're going to kick it back and say it's closed to new investors, but I've been rebalancing people into it and they haven't stopped it as of right now. They've got some MLP options with Invesco that, of course, are in the energy space. You have the IENAX, which is an energy stocks. Again, be careful because they're more volatile. OPGSX, Gold and Precious Metals Fund. If you've noticed that, it's up like 18% year to date, while stocks are down 11. Again, that trend, in my opinion, is going to continue. If you're with Franklin Templeton, they've got the FKRCX, Franklin Gold and Precious Metals Fund. They also have the Franklin Natural Resources. I think it's FRNRX. Again, good way to play the energy space. So again, do your research. Doesn't mean you guys over allocate the portfolio, because here's the thing, like if my advisors or my RVPs are never going to spend any time looking at client portfolios, then it can be really dangerous to make that change because commodities are more volatile. But if you're going to be proactive, you're going to watch it. Anybody that's paying attention to the piling debt this country has and all the money that they're printing, I just don't see metals and commodities continuing to crush it in this high inflationary environment. And by the way, guys, that's a talking point with clients. You'll get more business, right? They fill their gas tank up. So one way I explain it is that it's annoying when we put gas in our car right now, but if we own these energy stocks that are on the other side of it, at least we're smiling over here, right? When I put gas in my car, I personally own a lot of energy stocks right now. So I don't like filling up my truck, but I do like, my portfolio increasing substantially because I own that. So it's a really good way to kind of talk about it, right?
Awesome. Good. Hey, both of you, last question. You guys talked about renewable resources, things that are giving you off leads, referrals, some different things you do, like Brad talks about, which I think is unbelievable, that he takes that, 5 to stay alive, that theme of the things that you're doing to generate leads for yourself and prospecting. Do you guys have certain things that you're doing that just kick off, like you always go back to it, you're always getting referrals from it, you're always, marketing, like you talked about, Brett, on the networking side?
So I would say that where we get the most renewable sources of introductions, obviously, referrals from happy clients. One thing I didn't say earlier, it's not just a happy client that will refer you, it's an engaged client. It's probably a better word to use. Engaged people will refer you. And so sometimes people who are happy, they're happy, right? They're not going to go anywhere, but engaged people are more likely. You just had a phone call with Ben yesterday. He mentioned something about this. They're at the water cooler today. They're going to recommend Ben. So for us, it's, introductions through clients. It is, I still network, right? I still do that. I don't think you can have enough people, professionals, right? Industry professionals that could introduce you to, hey, like I got a referral from an attorney friend of mine, someone who's going through a divorce. It's a home run. The work's already been done for me, right? So the more of those that you have, those would be my two biggest ones that we get new introductions from.
Yeah, I agree with that. Ben, you got anybody you want to add?
Yeah, I mean, again, bring more value to your existing clients. I think if you've been here around a little bit, just get on the phone and bring more value to your existing clients. Your business is just going to skyrocket. I think internal marketing is always superior to external marketing, right? How can I bring more value to my existing relationships? How can I make them happier? How can I make their family, friends, and referrals happier? And I would also echo Brett. I think if I pick the second favorite, other than and client referrals would be also networking, CPAs, estate attorneys, personal injury attorneys, realtors. You know, how many walking billboards do you have out in the community that just sing your praises? I mean, that's what you want. I think of, you know, all the cold calling and prospecting people do, that most of it's completely unnecessary. The third one is I would just get really strategic with what you're doing on social media. Again, not blasting everything on your main page, but being strategic with farming it properly, where you're private messaging people, be authentic, be real, build that relationship, and then transition to business later. So Brett mentioned it earlier, you can have all the meetings that you want, but if you don't have a trigger question to take that conversation from a small collar conversation to a larger conversation where you're helping them, right? That's what people have to get good at. Don't just have coffee with someone and not have a next step. It's as he said, I thought that was really, really important, that you're getting a return on investment of your time. I like to pick on my wife. She's amazing at social media, but when she was in the field, she'd have an hour conversation about someone's family and she'd come back. I'm like, how was the appointment? I'm like, well, I know everything about their kids and all this other stuff. And it never got to a business, right? So what's the trigger question? I think you got to get really, really good at that. Anything else, Scott?
No, that's it. That's it for me.
Hey, real quick, I think tomorrow, those of you that want to learn more about profile videos, we'll have Kim post it, but I think there's a profile training video tomorrow. Those of you that want to get good at that. And then Scott and Mark, do you want to mention anything about next week at all?
Yeah, Mark and I are going to do MPI next week. Unless Mark surprises me, I have no idea what we're doing, but we'll figure it out for next Thursday. Good deal.